This book I released, we didn't even tell anybody. So that's why you're learning about this. Some of you may have already seen it out. But we didn't even tell anybody, and we hit bestseller. We were the #1 in real estate, basic investing, I think overall investing. We hit knowledge capital, and we didn't tell anybody. So we were scrambling afterwards because we were doing the soft launch, and then it just rocketed straight up. What's up, everybody, and welcome to the Self-Storage Income Podcast. Today's podcast is a big one, and it's a big one for a lot of reasons. It's probably one that I've been anticipating the most through the entire year. Now, today's environment's gone wild, and we're going to talk about, in today's environment, how you find deals, right? And how you get started, how you buy that first deal. Now, this is a big conversation. We're talking market analysis. We're talking about, your buy box. We're talking about understanding financing, 3 offer strategies, a whole bunch of different concepts and strategies. When I wrote my first book, I had written it obviously prior to COVID. And that was at a time where we talk about self-storage transitioning. So I often talk about storage, how storage was in really from 2007 or 8 to 2018, 19, it was an adolescence. Prior to that, prior to the 2000s, it was just a baby. It was an infant asset that was trying to mature. Now, after the Great Recession, it matured. Well, what happened was after we had COVID, right, it became a full-on adult. What does that really mean, right? Well, my book was written prior to that, and it was talking about the end of this cycle. Now, a lot of people are wondering today, is there still opportunity? Is the self-storage game, right? Is it petered out? Did I miss my shot? Did I miss my opportunity? Not only is my argument no, it is actually the opposite, that we finally have gotten a break, and we've finally gotten a break in the madness that was running before. Now, this is amazing for first-time investors. This is also amazing for those that are looking to grow and scale your portfolio. Now, why? Why is that amazing? Does that mean it's easier? Absolutely not. That is not what we're talking about here. Execution actually got more difficult. Now, you may be saying, okay, AJ, why is that a good thing? Well, we're going to go through here a little. But the thing that I realized that was really important is the game had changed since my first book came out. Now, the way we invest, how we invest and everything is still exactly the same. It's true. But how the markets are functioning and working and what's happening today, that's all changed. Those outside things have changed. Our strategy, our value add strategy, right? No, none of that's changed. But how we find deals, finance deals, the opportunities that are out there, it does. It's different. It looks different. And the consolidation that has gone on in the last 5 years, especially after the book, was tremendous. So that's why I'm excited to announce that we just released my second book. That's right, Growing Wealth and Storage 2.0. Now, this is not really an addition or add-on to the other one. To give you any ideas, I'm holding it right here. It is 430 plus pages. The first book was under 150. So this is, we're talking about 90+% of this is new, all new information. The book is massive. I was originally going to add on to it, and I ended up redoing the entire book. I added on so many things, it's ridiculous. The pages that we have on here, everything from underwriting an asset and the art of valuation, which is something that has become of the utmost importance in today's market. We built on to managing facilities. We built on to technology, automation, onto discovering your buy box, market analysis and demand, why that has become so important, because these fundamental things have changed. So 5-6 years ago, right, over the last 5-6 years, markets were just full and they always went up. Now, that was actually not the norm. The norm had been what had historically been occupancies more like 85 to 90%, never over 90. And then we had demand in some markets were stronger than others, and you had to do a lot of market demand and analysis and research. Well, After 2016, that changed. It was just everything was full and markets went up. But that wasn't ever how storage functioned normally. And I think a lot of people, even when they read my book, it was like, this is really easy because of course there's demand. Everything's full. But that wasn't how it was done. That's not how we built our companies off, because it was never done like that. Our value add strategy was actually predicated on inefficiencies in the market, that you actually could find good deals versus bad deals, and that the prices were representative of the quality. That all went away after 2018. Small market deal was trading at a four cap, the same thing as something in, Southern California or New York. It was just wild because of the cost of money. And that meant that we had a flattening of that value. And so part of the value add process and the acquisition part of it got very difficult, and analysis. Now, today it's difficult for another reason, because people see, oh, there's actually risk. The thing is, though, it's not that there's risk because of today. No, there was risk 4 years ago. You just didn't see it. Today, we see the risk. That's amazing if you're starting out. Because if you bought 3 years ago and you couldn't see the risk because markets were overinflated, now you're stuck with them. So we get to dive into and look at different markets, how they're functioning. We get to look at the data, the numbers. We get to look at all my case studies. We go over everything. I go over value, how value is affected by cap rates, income, the changes of it. A lot of you come to some of my webinars that I put on. That's all the stuff that we're adding in here and we're talking about, where I actually walk through and show the charts. This book took me over a year to build. It was changing as I built it. Last fall, I added on probably over half the book. Then I waited till this spring to finish and finalize it, just to see what the busy season would turn around. The reason we're releasing it now, and it's out, by the way, you can go buy it right now on Amazon. But the reason we're releasing it right now is because we have the spring season. The spring season, we saw an end last fall into this spring. We saw an end in the declining occupancies and declining rents across the board like we had. So the market was restabilizing after 22 and 23. That's what I needed. I needed to be able to see and say, all right, our market's stabilized. Are we back into a new norm? Which we firmly believe we are. Storage is now back into a regular, normal cycle that it had gone after the other one. So that means we're going to see normal, regular things like performance, and valuations should change, predicated on quality and market. All of that is great. Why? Because there are problems with interest rates and what's going on. Sellers now actually have to talk about value. Banks just won't fund anybody. And a lot of sellers, especially in third, fourth tier markets, which make up 80% of the United States, sellers are having a rough time selling. So that means they have to negotiate. We're getting seller finance deals, which we build out in the book, and I actually show you the numbers of the deals we're buying. We go right through them. I mean, we literally put it in. It is a massive book. It's funny, we could only discount this book online, the physical copy, because we have an ebook, which I'm going to talk about here in a second. But the physical copy, I could only discount it to like $10 because that's what it takes Amazon, the cost to even print and ship the thing. So it's very, very different than the last book. But we go over all of this, expense ratios, transfer day. We go through what to do on transfer day, how you transfer the asset, your checklist, your items. I mean, there is just, guys, I put it all in this book. I mean, this is the definitive resource for self-storage investing. It is massive. At the end of every chapter, guess what else we have? We have free resources that you can go download on the end of every single chapter. We tried to add them. We had, in chapter 2 alone, I had a whole entire thing on the self-storage bubble, what had gone on. That was bigger, that add-on to chapter 2 was bigger than chapter 2 in the first book, just the add-on. We couldn't even put it in because it shot the price way up for Amazon to ship and deliver. So anyways, guys, I'm really excited. I worked my frickin' butt off for this, and we really are just putting it all in. I want everybody to know, because the thing is, a lot of people, even though they may be doubting storage right now, what they don't understand is they should have been doubting it more like 3 years ago. Now we're back into a new normal, and now is the best opportunity to get deals in the marketplace, especially if you're beginning. If you have if you got 50 million in cash, right, you're playing a money game. You're playing a different game, right? Now, if you don't have 50 million in cash, though, this time is the best time to be buying, because you are not playing just a money game, which is a spread on what you can buy versus what you can borrow and hire a third-party management company. That game really thrives at low interest rate for people that have money. This book I released, we didn't even tell anybody. So that's why you're learning about this. Some of you may have already seen it out. But we didn't even tell anybody, and we hit bestseller. We were the #1 in real estate, basic investing, I think overall investing. We hit knowledge capital. We hit new best release across all the categories, investing, everything else. And we didn't tell anybody. So we were scrambling afterwards because we were doing this soft launch, and then it just rocketed straight up. So now we're scrambling, trying to tell everybody. We thought we'd have a couple weeks for a soft launch and not anybody to know. When we wrote the first book, it was our listeners. It was you guys that made it become a bestseller. And that's the same as now. And really, we're talking about the podcast. This is our community here, right? This is all the people that listen to me all the time, talk about my struggles. I'm talking about what's working, what's not working, what we're failing at. This is a time that I am very transparent, and it's something that I'm even vulnerable in. And my goal is to be more so. I want to talk to you guys way more about my struggles running a business, which I have a whole lineup of podcasts and things going for that, and struggling in these times and how to find opportunity, and knowing that everybody is struggling as well. And that's a never-ending thing. So whether it was 3 years ago, 4 years ago, 5 years ago, right? The struggles that come with buying real estate, operating real estate, growing real estate in an ever-changing market are uniform. And so we're trying to be so transparent. That's why we did the course. I wrote this huge book, took me forever, and a lot of work from a lot of people. And we're trying to make sure that it's out there. But it was the podcast listeners, it was you guys that really made the difference. Also, by the way, we're also giving the book away. You can go into the show notes links and get the book. The digital copy, it's on there for like $1. So go buy the digital copy. You can get it for $1. Click through, look at all the charts, look at all the graphs, check out which it's ton. It's chocked full of numbers, everything else. I was against education when we started. That was not really my thing. And I've really actually enjoyed teaching, sharing our opportunities, our downfalls. We're trying to be better at it. I want to help you guys. I had a goal that basically I would write a book and give out stuff that, you could literally get everything you needed to know, as opposed to going and doing all these other things. This ability to give and hand somebody the ability to operate and learn self-storage. It's always been a thing for me because of what it did for me. And you guys know, self-storage changed my life. It changed my family's life in a real way. Not because it's obviously metal boxes, but because when I had my whole life end, when I became paralyzed, I lost my job, which I had golden handcuffs on. It was the only thing I'd ever done or known. And we had storage on the side. And it was storage that allowed me to not lose my house, not lose my savings, my life. And while I was in a wheelchair, while they got me, and months after being on life support, they got me out of the hospital. My wife was taking care of me, and my brother moved in with us to take care of me in bed. And we could survive and live because of these little metal boxes. And so the asset storage is a derivative of something else. And that derivative for me was financial freedom. That derivative for me was actual freedom. And it was a derivative of protection for my family. It was a derivative to me to live a life that I didn't think I could or know was achievable. And that's what I'm sharing. That's what I'm sharing, right? The asset is a derivative. I want to show you how to use the derivative to do those things and to receive those things. It's very important to me. This is why we allow people to invest with us, is so we can share that because of what it did for me. This all comes back down to a promise I made in the hospital. It was the night before Christmas. You guys have probably heard the story. I'm sorry, I'm going to tell it again because it's important. And the night before I was going home, I'd been in the hospital on life support for months. I was getting a hospital assisted home visit. And it was the first time that I'd been home in months. I was looking out the window, it was snowing, and I was so excited because I knew my kids were going to get presents. They were probably going to get spoiled. And I thought, I'm not worried about losing my house. We just had our fourth child. He was like 4 months, 5 months old when I went into the hospital, just an infant, a baby. And I wasn't worried about what are we going to do? How am I going to pay bills? How am I going to take care of my family? Anything else? No, I knew they were going to get presents, and I was so excited to see all the kids open it and be happy for the first time in a long time. It was my first time going home. And I thought to myself, this is really important. This is more important than I thought it was. And so I promised that I would teach it and allow other people to join. And I've been trying to fulfill that promise for 7 years. And although we've stumbled at it at times and not done a great job, we're getting better, and we're trying to do better to fulfill my promise. Now, the first part of the book, I go much more in depth on what happened to me in the hospital. Funny enough, a lot of people asked me about that, wanted to know. The first book I had, I think it was like a page or something. And this time I decided to go a lot more into it to give you guys a better look of what happened during that time and where we were and how I went through that and came out of it while building a storage company. So I added in about 4 or 5 more pages that go, maybe more than that, right at the first, in depth on going through that. So thank you, thank you, thank you. I appreciate you all. I've been doing meetups. We've been going around the country. This year I've done 6. This is a lot of time away from my family. A lot. I'm talking weeks. And when I was discussing this with my wife, it was, is this something I should be doing, right? And is this time worth not being with my family? And we determined maybe not long term, but for right now, for my business and for everybody in the storage industry, it's now the most important time. So we've been doing these meetups, and we're having 100 plus people per meetup. I'm trying to introduce myself to all of you. I want to talk with you. I want to meet with you. Now, one of the things that we will also be doing for everyone this year is being more open about everything from struggles within our business, not just landscape atmosphere, but really talk about the business side. This has always been an interesting thing for me when deciding whether we should be talking about this, how open we should be about this stuff, because there's obviously other people involved. We have investors, I have employees, we have things like that. And so I always get nervous that I'm like, oh, maybe somebody doesn't appreciate that I'm sharing something that involves them. So we're trying to do this because I think it's really important. The struggles that you face in building a business, they're always there. They're always the same for everybody. And we want everyone to know those so they can learn from us and what we're doing. With that, everybody, all right, that's it. It's the launch. The new book's out. So check it out. Now, let's go back to going through and looking at today the opportunities, what we're seeing, and values. One of the large points that I make in the book, because this is probably the most complicated thing that a lot of people feel, and that is how to value. Now, why this is really important today is because when you go back to when markets are hot, when they're booming, when you have lots of free money, everything's going on, markets are just, the price is whatever somebody will pay and what the next person will pay more of, and it just keeps going up. So value is not really in question most of the time. I mean, it is, but the price isn't in question because it's just, well, they're going to pay for it, so you either do or don't. That's not how it works today. Sellers are not getting lots of offers. I haven't seen an asset that went to market that traded at its listing price in like a year. So what that means then is people are going, okay, then what should I offer? Like what is this good or not? How does this work? In times like today, we have a readjustment of the perception of value from the marketplace, the fundamentals, what the assets are doing, how they're performing, and the capital markets. So yes, I talk a lot about this, but intrinsic and extrinsic value, because it's so important today. Extrinsic value dictated everything prior, where it doesn't today, and the intrinsic value is determined individually. So before we go to that, I'm going to hit real quick. Extrinsic is just the price of the asset that a buyer and a seller agree in a marketplace. Intrinsic is what the asset produces. So you buy it for $1 million, it makes you net $100,000. That's what its value is. It's $100,000, and let's say the tax breaks and things that you get from that asset, right? That's what you got for your $1 million. Now, the price, whether that be $1 million, 500,000, 1.5 million, that's extrinsic, even if that $100,000 doesn't change. So extrinsic value can change whether or not the intrinsic value does. That's what we're seeing. So assets that were worth more 3 years ago are worth less today, and everybody says, oh no, it's worth less. Where I look at it and say, it's worth more. How can you say that? Well, if I'm buying it, I'm getting more for what I pay for. So my intrinsic value is worth more. Now, this is really important because it changes the context of how you view the marketplaces today. Whereas you're getting more, they're worth more. And that's how we view it. We focus all on intrinsic value. So when you look though, the problem is intrinsic value is a individualized thing. So the intrinsic value that is acceptable or not. What I mean by that, this is where it comes down to really knowing and understanding your buy box before you ever go out. I know my exact methodology and I know how we're going to get increase in value through change of the intrinsic value, i.e. rising the net income. So when I look at a property, I am looking to achieve, and my buy box is 3 to 5, 6 years at the most, I want 120+% return. That means I still want to own the asset. I'm not selling it. I want a return on that. If I sold it, I would need a much bigger return. Okay, we're talking like 3x. Now, when we look at that, I have to buy an asset that can achieve those things. I'm looking what is the intrinsic value today, and how can we improve that intrinsic value to make it produce those kind of returns. So the individual buy box and what I want as far as intrinsic value is predicated on what I'm trying to achieve as an investment. Let me make this clear. That should not be your buy box. That should not be what you say. So you say, I don't want you to say, oh, AJ thinks it needs to achieve this, so I need to achieve that too. That's not how it started when we got started. That's not how it worked. Our buy box was a cash flowing positive asset, and we determined what we wanted it to cash flow, how much, right? And we wanted to buy it. We wanted to be able to pay down debt, and we wanted it to cash flow a certain mark off what we bought it on that was predicated on individual things and what we were doing in our lives. It was not what it is today, and that's okay. All right. So don't just copy and paste mine. You don't want to do that. So first of all, you need to understand your buy box. What am I wanting from that asset? Okay. What am I wanting outside just to make a ton of money? Get very specific, because what that does is that determines then what assets you should buy and the strategy that you need to deploy. That's how we did it. So our buy box and what we were needing evolved into what it is today, predicated on what we needed. So we had a value add strategy. We needed our money back, but we wanted to still own the asset. I wanted to have my cake and eat it too. So we did value add, refinance, money back, tax free, because taxes was a huge one, kept the asset, redeployed the money, and we compounded and built it. It was based upon what we needed. I had to keep the assets because I had property management. At the time, there was no third-party property management. It didn't exist. That meant I had to actually pay for the operation. So if I lost the asset, I'd lose that income to pay for it. I couldn't. You see, though, how my system, my targets are predicated on the whole thing evolved into a way in my buy box on us, what we wanted and needed, and how we had to get there. So what we do can be used for anyone at any time. You can take the tools and the strategies we use and use it to get your buy box and achieve whatever you're trying to. That's why we share it. That's why it's all in here. But the first thing is you need to know how to value it. So based upon what you're trying to get, what is the value of that asset to you? Is it there today? Do you need to create it? And then how will that market support it and what will achieve? In today's market, you can look and determine those things and give offers based upon those things. You can offer seller finance. You can do those things. Once again, 3 years ago, it was just you pay this amount or get lost because somebody else will pay it, and I have 3 more offers. As a beginner, that's a really bad place to be in. Whereas today, it's not like that. So really looking out and moving forward, everybody, in today's environment to be successful and get your first deal, it's all about starting with your buy box, understanding what you're trying to achieve. From there, understanding how to value it based upon what you're trying to achieve. So, what are the expenses, net income, how much demand is in the market? From there, it's about taking that buy box, and then you will have a buy box like this. I have my returns, or what I want from it, buy box. I have my asset buy box, my strategy buy box, and then my market buy box. Those 4 buy boxes align to find me the perfect asset. Now from there, I need to go out and find it. But that limits me down to all of the assets out there, which ones I should be buying. So we know that out of 60,000 storage facilities out there today, we have like 3,000 that we're really targeting. So we can move that dial and figure out where they are and really hunt those 3, 4, 5,000, whatever they are. That 3,000 that I'm trying to hunt is different from everybody else's. Once you know, then you can create a hit list. Then you can target them. You can also go tell brokers, this is exactly what I'm looking for, right? Here are my buy boxes. Here is my market, my asset buy box, and here the market, the asset, your strategy, right? And then what your expected returns are, and you can put that all together. You're giving a target for the broker. Do you know? And you can say, well, I have this might make it, this might not. This will make you effective in a landscape that may be uneven. So in a landscape that is not clear and uneven, there's opportunity, but not unless you know what you're looking for. So you can't find opportunity unless you've identified it and know what you're looking for. That is the first and number one step in today's landscape to being efficient, getting good deals, not taking on risk, and continuing to move forward. Now, yes, this is a big subject. I understand that. And it's also a hard one to discuss principally on a podcast. Why? Because there's so many numbers and charts and everything. So go buy the book, you guys. Let's get started. You can go through this. But in today's environment, getting started and thriving is all about focus. It's about focus on what you want, how you're going to do it, where those assets are. And it's about being determined on achieving, right, that goal, but also not being deterred by outside forces. So your buy box should really identify based upon what the asset will do, not necessarily interest rates, not necessarily other things like that. We're talking all intrinsic value. That allows you to move forward in the unknown because you're talking about a 3 to 4 mile radius. That's it. I want to know what's going on here. I want to know what's that. So what's happening in wherever, the Middle East, who knows where, what. That doesn't affect this. This doesn't affect my strategy. That's easier said than done. Trust me, I know. We went through 2008 and we were buying when other people were like, you're crazy, you're stupid, these assets are going to be worth less. And I'm like, okay, yeah, you're probably right, but the return that I'm getting, the intrinsic value, meets my goal, meets my buy box. So we kept buying. So we didn't care what other people were saying because we knew what we were doing. As in, we just knew what we wanted and we were getting it. And so we were getting the opportunity. Same thing applies today. Now, for beginners, that's why today's the best opportunity ever. There's less buyers, less opportunities for sellers. They have to negotiate with you, and you can achieve results and returns that you just couldn't 3-4 years ago. So everybody, I'm very excited. Go get the book, send us in that review, and we will shoot you over our course. Let's get out there, everybody. Make sure you're also watching the webinars. If you're listening to this the day or two that it came out, we have a webinar this Friday. So make sure you're watching the webinars. We're keeping everybody abreast. And until next time, everybody, let us know when you get on those webinars what you're seeing and if you're achieving results. And please, I hope you guys all like the book. You should know. This is really important. I tried to get this out so fast. I only had one review on spelling and grammar. So I'm telling you, all the OGs that are out here buying my book, you are going to find grammar that is wrong. You are going to find spelling errors. So if you do, please, I love it when people inform me of it because I've only had one so far. We have others reviewing it, but we had to get it out fast. So because of that, send them in to us. You can say, hey, AJ, on page 64, on this, shoot us an email with them. And I literally send it over to our people and we adjust it because then we send the manuscript updated into Amazon and then it prints the new one. So over time, it'll get better. So hopefully over the next month, we can clear up a lot of those. But I know, I understand you don't need to get on social media and say, AJ, there's a lot of spelling errors. Well, I am dyslexic and we've had one person review it. My last book, I had 5 editors review the spelling and grammars, 5 for 150 pages. This is almost 450, and I've had 1. So help me out. Let me know. Shoot them to us, and we'll get them fixed. And I apologize for that, but I thought the information was more important to get out than making sure that all my spelling mistakes were corrected. Thanks, everybody. I appreciate all your support, and let's make this year and next year ones that change the rest of our lives. Appreciate you. Technology is the name of the game, and how you operate your facility and the efficiency at which you can operate will depend on the technology you use. Your property management system, what it allows you to do, and what you have access will determine the outcome of how that facility performs. That's why we go with Tenant Inc. with their product Hummingbird, because they are the best in class. When dealing with automation, when dealing with move-ins, customer acquisition process, improving my online acquisition process, they are bar none the best. So if you are looking to automate your facility or operate it in a best-in-class way, make sure you guys are looking at Tenant Inc. and their product Hummingbird. The link is in the description.